What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's July 4th. It's a holiday. At least if you're here in America and around the world, it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we've got a ton of news. I'm not going to BS you and just get right to it and kick things off like we always do with Meta Platforms. Start of the week at 741. So it actually drifted lower by about 3% to finish the week at 720. We're about a month away or less than a month away from earnings. We'll give you those dates when we get to the technical segment. Meta is pursuing $29 billion of fundraising to help pay for all its AI acquisitions, its acquihires, it's poaching from OpenAI. It is on a full-blown buying spree over at Meta. They are likely to recruit even more AI talent from OpenAI and anybody that has some talent and bring them over at Meta. What did Mark Zuckerberg see? Why did he just all of a sudden start a spending bonanza and including a $29 billion fundraise? I talked about that in our free Substack. Link down below. It's always going to be free. It's fun stuff delivered right to your inbox. I'd appreciate it if you subscribe, and thank you for the thousands of you that already have. Now, on last week's show, we talked about this digital tax, and there was some rumbling that potentially President Trump would slap some tariffs on Canada because they were going to do this digital tax on companies like Meta, essentially taxing them on some of their services that are rendered inside of Canada. Well, Canada backed away from that, and at least at the current time, although these things changed by the Truth Social tweet, at the current time, things seem to be steady from a tariff perspective with our neighbors to the north. Moving on to Apple. Start of the week at 201 and blast off. We talked about it on last week's show. Looks like this one wants to set up towards the bottom of the channel. That is Apple. And poop, there's the pop. You often see these, and we'll talk about this more when we get to technical segment. You often see this leading into earnings because you want to position yourself in Apple one way or another. 27 days from now, they report earnings. And when we talk about Apple today, seems like there's some positive news on the product front. Company potentially releasing smart glasses as soon as 2027. They certainly have some design aesthetics and design chops over at Apple, to say the least. They also have speaker technology. And when I was at the Consumer Electronics Show back in January, that was impressive on some glasses. And then other glasses that I tried on left some to be desired, but there were some glasses like the Amazon one. It was like, wow, it almost sounded like I had headphones in. And then I tried some other ones and it was clear the speakers weren't as good. So if Apple can nail this, they believe maybe, a couple million units, again, to Apple size, that doesn't move the needle. But if this is a blowout hit, this could be the next great product. Now, they are also continuing to update the Vision Pro, which is for the most part not really selling, to new form factors. They had a F1 movie, which I think they financed and produced over at Apple. That topped $55 million in its debut, and it dominated the U.S. box office. We've got more kind of like movie TV news, obviously when we get to the Netflix section, but also Google. Company touting a more affordable MacBook, depending on your budget. MacBooks already start, at least the MacBook Air starts at $900. So will it come under that $900 price tag? You also have full-size MacBooks, which cost about $1,100 up to the $1,600 and more for MacBook Pros. If you fully optimize those things and juice them up, I think I paid like $4K for mine. Maybe the prices come down. You don't probably need one that big and that powerful, but I'm telling you, it was worth it. Apple is considering using OpenAI or Anthropic for its Siri upgrade. I saw some negative commentary. This was another thing that I kind of talked about on the free Substack, was that Apple missed kind of this AI surge. They're not developing kind of a really large language model that is certainly on par with OpenAI or Anthropic. Not many companies are. And so partnering with these companies, I actually don't think puts Apple at a big disadvantage. If you're going to buy an Apple iPhone, you're going to buy one. Clearly, Siri has not worked for years. The fact that it doesn't have a proper AI assistant is probably not keeping that many people from buying them, although the sales data could potentially refute that claim. Now, speaking of sales, Apple might have too many because they are going forward in an antitrust case about the iPhone essentially being too dominant. And that's always kind of a first world problem for a company getting an antitrust case because their business is too good. This is why the stock of Apple is moving heading into earnings. Not that the sales that we're seeing right now the next couple of weeks really counts, and Apple doesn't really get on the call and talk about, the April or the first couple of weeks of April or forward guidance. They don't really give that to you on Apple, but for the first time since Q2 of 2023, so like 2 years ago, iPhone sales increased in China by 8%. Now, it was spurred by some price discounting by the company, which is actually relatively rare, but you've had aggressive pricing inside of the country of China. This is very, very good news for Apple. Also good news for other brands in the region where the sales fall off. Some people thought it was like maybe anti-American settlement. Obviously, you're kind of, moving into kind of lower comps, so it's easier to put up growth, but 8% year over year growth for the Apple iPhone probably gives some hope for like a Starbucks or a Nike or maybe even like a Tesla that obviously has big businesses in the region. Speaking of the region, we've got Vietnam cutting a deal with the United States in terms of tariffs. I believe there was about a 20% flat tariff on goods coming from Vietnam, although that is still really high. It is actually lower than the 46% reciprocal tariffs that were put in place about 2 months ago by the Trump administration. Nike gave an earnings report maybe a week or so ago where they were saying that this tariff was going to cost them about $1 billion annually, and some estimates believe this will save them about $300 million. Nike shares have climbed back now up to 76, but this also likely helps Apple to a certain degree. Also helps Amazon, which started the week at 223 and finished the week roughly flat. This as Andy Jassy made comments that we've all been waiting for as Amazon shareholders, that robots may soon outnumber humans in its warehouse. And it's nothing against the warehouse worker. They work incredibly hard. They're not paid well enough, but it's a dangerous job. There's been safety issues. There's been bathroom break issues. There's also a churn issue. Churn is just a fancy word for people quitting over at Amazon. It is difficult for Amazon to fill their warehouses with enough humans. So augmenting them, at least initially, with robots, and then probably potentially replacing the vast majority of them, which according to my research, and I'm working on a newsletter for this, like how much is Amazon going to save and how much could this flow through the bottom line? And how will this impact Amazon's $2.4 trillion valuation? I tell you what, if you take 1 million employees and shave off 10%, 18%, 20%, 25%, 50% of them based on using robots, well, newsflash, Amazon stock probably going a lot higher. Now, speaking of higher, Anthropic's revenue up $4 billion in annualized revenue. The company is now valued at $61.5 billion. Amazon Prime Day is coming next week. Amazon did not pay me to say this, although if they want to turn this into a sponsor drop, they know where to send the check. From July 8th to July 11th, you are going to find Prime deals on Amazon's website. Amazon also at the end of, usually after end of each day, but certainly probably on the 11th or the 12th, they'll come out with a press release and they'll say this was the biggest Prime Day ever. If they don't, it's probably bearish for the stock because they do that every year. Now, how they judge it, who knows? It's 3 days versus maybe 2 days or even 1 day in the past. But if you're looking for things on sale, and my wife certainly has reminded me about it, that starts next week. Moving on to Netflix, start of the week at $1,331, down about 2.5% finished the week. We'll call that at $1,300. Now, Netflix actually spoke with Spotify, another high-flying stock that focuses more on music and podcasts and that type of entertainment, although there's video podcasts as well. And the two might potentially tie up for music shows, celebrity interviews, and some unscripted television. If you're into outer space and NASA, there's a new NASA feed now on Netflix. Moving on to Nvidia, start of the week at 156, and the trading day was closed today. I should have mentioned that off the top. I certainly could have recorded this video yesterday or earlier today, but clearly I'm lazy. I've got my I'm not even a fan. I'm a Lakers fan. I've got a Clippers shirt on. Clearly it's been one of those days for me as Nvidia finished the week at 159. One of those weeks for Nvidia where it just inches higher and higher. Essentially, at a 52-week high. Now, OpenAI says it has no plans to use Google's self-developed chips, otherwise known as a TPU, which it's developed in partnership with Broadcom. This news crossed earlier last week, or I think it was actually early this week, or maybe it was this weekend, that OpenAI was potentially testing these chips. Now, OpenAI did personally come out and kind of refute the claim, but they refuted it in kind of a creative way, kind of almost implying that they absolutely were testing Google's chips. And what was interesting for Google and the broader kind of cloud infrastructure market is OpenAI was actually testing previous generations. So not even the latest generation of TPU, one that maybe was like a year old, 2 years old, or maybe even older than that. That is a good sign for these cloud companies because, as you know, they're spending tens of billions of dollars on these cloud infrastructure build outs. And if the ones 2 or 3 years old are still humming and could make money, well, that's certainly great for these companies. Now, Microsoft is revising its in-house AI chip plans, as many believe they are partnered with Marvell. That's probably the big mistake. If you want to build custom in-house chips, you probably should partner with Broadcom. They're the only ones that are pulling it off at a major level and a major scale. Marvell, if you read like the Substacks and the real like technical geeks, and I say that affectionately, Marvell gets trashed on. Now, here's what I would say about if you're reading Substacks about semiconductors. A lot of these guys, they're so geeky that they forget that these are stocks and they move on profit and those types of things and sales and outlook. And sometimes that stuff is priced in. So while Marvell gets trashed, it doesn't necessarily mean the stock is trashed, but the fact that they had to revise an agreement with Microsoft, probably not a big or not a good thing. CoreWeave is going to launch the first GB300 NVL72, whatever that means. But what I do see out of CoreWeave is they have some technical competence. This company is the first to market. Now, they have an investment from Nvidia, but from reading kind of industry reports, CoreWeave has technical talent on staff that is able to launch these things faster than others, which obviously gives a competitive advantage in the marketplace, and people get access to these things sooner, so they're probably willing to pay a little bit more. Speaking of more, moving on to Google, start of the week at 178, up just a fraction, up to about we'll call that 180 since it's July 4th. Now, we talked about this in the Microsoft or the Nvidia segment, that the self-developed chips by Google probably not going to be used by OpenAI, but the fact that they tested them, probably a good thing. Also, some reporting that I saw on this is that OpenAI still has this relationship with Microsoft. It's allegedly on the rocks, and then it might not even be possible for OpenAI to use Google's TPUs. And so this is not necessarily a judgment on the TPU's effectiveness, but maybe more to do with the agreement that OpenAI has with Microsoft. Now, Google is releasing new AI video generation model worldwide called, I think it's called Veo or VO3. I mean, this thing is spectacular, and it is basically the future of a lot of content. Now, look, many of you that are like super into this type of content, like this AI generated stuff, you're already seeing it on the social media sites. A lot of you are probably seeing it on TikTok, which I'm not really on that much. You're seeing it here on YouTube. But this will cross over into Hollywood, which could be a good thing for Hollywood in the long run, as many believe that Hollywood has struggled with storytelling and creating really epic films. By being able to produce a lot of other films using AI or AI supported, well, it might open them up to put more attention into kind of that traditional kind of film on a set type of production. These AI videos, needless to say, require a tremendous amount of compute power, and oftentimes they're only maybe 60 to 90 second long. Imagine making a full feature film, which I would imagine we'll be here discussing this on the channel at some later time within the next couple of years. And look, and to a certain degree, this stuff's already being done, but I'm talking about a major Hollywood studio or something like that, or a major film that goes viral, will be done using these AI systems, and that will create a lot of opportunity for semiconductors, believe it or not. Now, if you're a publisher, it means you publish websites, maybe similar to like a Seeking Alpha or Substack or Equity Empire or whatever you want to call it. Well, if you run ads on that, oftentimes you're using Google. And because people are using Google and using AI search overviews and other aspects of AI, then not much or less traffic potentially is flowing through to websites, which then rely on affiliate clicks or ad clicks or signing up for things. And Google is looking to help publishers, but they only can do so much with human behavior. Moving on to Microsoft. Start of the week at, we'll call it 497, just hovering at that range, essentially 52-week highs. We'll call that 499 on Microsoft. Now, they are going to reduce their workforce by about 9,000 people in their latest round of layoffs. This is a 4% reduction in workforce, as Microsoft is probably just a couple of weeks away from earnings. This is when the CFOs kind of go over the numbers. This is when, right before earnings is when you see that layoff announcement, because the CFO has already gotten at least prelim numbers, or they're trying to finalize them, and they say, well, we can get rid of these people and this stuff. So we certainly pray and hope these people can land on their feet, but that's a lot of people losing their job over at Microsoft. Talk about the Marvell chips that potentially are being developed with Microsoft in-house. Looks like that's delayed. That's probably bullish for anybody that makes merchant silicon, obviously Nvidia. OpenAI CEO Sam Altman says he's, quote, politically homeless. Where did he get that from? I got to license that. That is an absolutely fantastic phrase, politically homeless. Maybe in today's society, though, he's politically unhoused. That might be the proper way to say it. And why I've seen many conservatives slamming the president and the Republican Congress for passing this big, beautiful bill, which cuts things like Medicare, food stamps. I had a super conservative bug guy that cuts all or sprays for bugs around here. I mean, mega conservative guy. He called Adam Schiff, the Democrat Adam Schiff, and says, hey, we don't agree on anything, but they're cutting funding to the Affordable Care Act. And Republicans are pissed. The primaries in a year or two are going to be unbelievable. And the presidential election in just a couple of years, like if you want to make millions of dollars off a single event, like that is going to be one of the biggest events of all time here in the country, at least from an election standpoint. But it's really interesting. You have both sides just like kind of pissed at the incumbent parties, and we'll see where these things go. We have Elon, when we get to Tesla, potentially starting his own party, and that may or may not be a good idea. Moving on to Tesla, start of the week at 321. This one drifting lower. I don't got the amount, but we're down to about 315 on that one. Now, Model Y complete its first fully autonomous delivery. This is where the Tesla got manufactured in Texas, in Austin, Texas, and actually drove itself off of the assembly line and to the customer's house. Now, there were some small caveats. It did look like it worked as planned. It traveled on city highways and actually went quite a distance. It did have an upgraded version of the self-driving software, which most people would assume probably gets uploaded to the general public sooner or later, but then it was later downgraded after the customer took delivery. Trump and Elon Musk don't appear to be on the best of terms as Trump slams Elon. Here's the thing with this feud, and this is not going to be that popular of a take. You probably want me to be like super pro Trump or super pro Elon or anti both of them. I would say they actually, in this scenario, they probably both have a case for being correct. Musk slamming Trump for this, quote, big, beautiful bill. There's a lot of things in there that aren't big, that actually are big, but are very beautiful, including a lot of spending. And Elon does get a lot of subsidy. So the fact that he's touting budget cuts, Doge, government efficiencies, when you can go to Tesla's website and get a $7,500 taxpayer-funded tax credit. It's just something. And look, I've taken advantage of these tax credits, from putting solar on my roofs to buying a Tesla. I take advantage of them all, but it's not something I necessarily agree with when we have people that can't afford a car or can't get a new car because they can't afford it. But I can walk into a Tesla dealer and buy an overpriced electric vehicle and get a taxpayer subsidy. When you look at SpaceX, among others, some of the subsidies make sense. Some of them may even save the government money, but Elon Musk is kind of a pot calling the kettle black in some cases, but I also see his side in other ways. Now, Many Tesla bulls would love for Elon Musk to stay on the sidelines of politics, but it appears potentially he might float a new political party. And if there is one person that could actually, I don't think he's going to win, it's potential a third political party could make it difficult for one of the main parties, the Democrats or Republicans, to win in a certain district or a state or even maybe potentially nationally. The last time I've seen it, I think, was Ross Perot back in maybe that was like 1996 or something in the kind of the original Bill Clinton election. Be tough to gain traction, but Elon Musk has enough money to throw at these things. And like I said, I've heard it from Democrats, my Democrat friends and my Republican friends. It appears that almost nobody is happy right now. Now, XAI is raising $5 billion in new debt and equity. This as obviously AI startups are some of the hottest things on venture capital road. Tesla broke an 8th-month Chinese sales slump. Wow. Rose about, we'll call that 1% to 71,600 when the expectations were completely on the floor. The fact that you actually had positive growth in China, this mirrors what we saw out of Apple. Again, I'm not saying run out and go buy Starbucks because there's a couple other companies that come to mind when I'm thinking about US-based company with huge market in China. And when we've seen it on the show, Tesla sales in China have been crappy. Apple iPhone sales in China, they haven't grown in 2 years. And we're seeing, so there's clearly been this shift in China. And it's likely not related necessarily to Tesla or Apple. It's just a broader shift. So who's that going to probably be good for? Probably Starbucks, probably Nike eventually, probably a handful of other companies that have a big presence there. Now, Q2 deliveries in the United States were an absolute disaster. The expectations were for 389, but they came in at 384. During the quarter before, they produced 410,000 vehicles. So you're seeing a slippage. And look, car sales, depending on where you look, what region you're looking at, it's still a function of interest rate payment. But to play a little bit of devil advocate and kind of refute that point, when you go to the Tesla websites, they often have very aggressive APR and they have very attractive lease rates. That is why I'm not in the camp. I always see it on Twitter and places out there where a lot of Tesla shareholders are talking and discussing. Everybody's talking about the quote, low price Tesla. Unless it cost under $20,000, it's probably not going to be that quote low cost because you can go to the website and for a lease, which is really what you want to do with a depreciating asset. You don't want to buy a Tesla. You don't want to buy a car. Now, there are some exceptions to that rule, typically classic cars, although you've got to maintain them and oil changes and probably have them in a climate-controlled garage and those types of things. Some cars do appreciate in value, but new cars get you to point A to point B. You want to lease them. And when you go to Tesla's website, you can sometimes get leases for their cars for like $299 per month. If you can't afford a $299 car payment, keep watching the Investor Channel. I'll be that guy in your life that continues to push you, and eventually a $299 car payment is going to seem like nothing, and you'll be paying $14.99 for some overpriced Mercedes. Moving on to technical segment of the show. Speaking of overpriced, the S&P 500, what'd we do? We bounced all the way off the bottom of the technical. And what did we confirm this week? A new higher high. And so you know what that means. We're waiting for pullbacks on the S&P 500, the middle of the channel back to 60.32, and then obviously lower should be bought no matter what the president or what is happening in the world. Now, Meta also, we would probably assume this is close enough to a higher high. This is setting up towards the top of the channel as we move into earnings. What I'm referring to the top of the channel is oftentimes on earnings. We actually saw this last earnings season. It was during kind of the Trump tariff stuff that was happening in April. A lot of these stocks were setting up at the bottom of the channel. It created a great buying opportunity. Now they're setting up at the top of the channel. It is very difficult to beat expectations and push the shares. I'm not saying it's impossible, but it's difficult for these stocks to set up at the top and then power through. So what we're waiting for is inline results, soft guidance, aggressive overspending by Meta, at least by the view of some on AI. You're waiting for pullbacks. Your first opportunity probably with Meta, probably back to 700. Apple is looking absolutely fantastic. We got to reset this price scale because we got to see this green candle. I've been trading this one and we flagged out. This is played out perfectly technically, and this is why I like monitoring these big cap stocks, is because they often, all the computers and all the really smart traders and stuff are watching these. You get these flag out patterns where you create this flagging pattern. I'll change these to purple so you can kind of see them maybe a little bit better. Maybe your eyes are better than mine and I can kind of zoom in here, but you get these kind of flagging out or pennant formation, and you also have what's called kind of this flagpole right here. And oftentimes when you break out on these, you break out the length of the flagpole, or at least maybe an approximate. We've already started to do that. This one's tracking back to 222, and where it's tracking to is back to the top of the channel, or probably back into the 230s, 240s as we head into earnings. Because do you want to be caught on the short side after they reported positive China news and the tariff news? I don't want to say it's behind us, but some of that is behind Apple to a certain degree. Amazon looking absolutely fantastic. You would love for this to make a new higher high, maybe heading into earnings, maybe before earnings, maybe after earnings, but back into the 250 would confirm that. Netflix just keeps powering higher and higher lows, higher highs. This one just keeps going. And then here's what often, this does happen, where you just hug the channel. Sometimes you see this on the bottom. Sometimes you see it on the top. Obviously the top we're not super excited about, although I think my sons bought this one back here at 1,100. Now they're up $300. They're going to start a new paid subscription service anytime soon, probably launch a course and a Discord server. We're obviously joking, but we're also not joking. We're waiting for pullbacks in Netflix. Nvidia looking absolutely fine, just topped out at a new higher high. These are areas where you find some hesitations, pull back in Nvidia. I mean, come on, you know what to do. Google, right in the middle of the range, just walking back up. This one also reports earnings 25 days from now, probably wants to come up here and retest 205. Microsoft already went to the highs. This also shows you what happens when you go to the highs. So Microsoft, the previous all-time highs were made back in July of 2024. Right here, it will call it about $460 per share. We talk about it a lot on the channel. When you break above, you go on oftentimes a mini run. In fact, I know traders, this is the only trade up they screen for. Now, they're doing it more than just the FAANG stocks. They're, thousands of stocks likely. They're scanning for the breakout because they like to buy it here somewhere on this breakout. A candle or two higher is probably good enough. They want to do that. They want to set their stop just underneath that, because oftentimes what happens is exactly what happens with Microsoft, and you just blast up all the way from 460 up all the way to $500 per share. You're waiting for pullbacks and back tests of the previous highs at 465. You can almost guarantee that will happen, maybe potentially 25 days from now after earnings. Tesla sitting right in the middle of the channel. Nothing to be overly alarmed about, nothing to be concerned about, nothing to be even, this chart is good. You got higher highs, higher lows. You've confirmed a new higher high. If it does that again, you are getting back into the 530s on this one, and you're at 315 on this one. So your ranges are really high with Tesla. I would probably have a stop loss somewhere underneath these lows at 209, just in case Elon Musk and Trump or something happens between them or to one of them that causes the shares to drop. Folks, that was FAANG Stock Recap Show for Friday, July 4th. Enjoy the fireworks and enjoy your weekend. Be safe, and I'll see you again next week. Good luck with your investments.